with than Tavi Costa. And Tavi is the macro strategist at Crescat Capital. And you've been busy, Tavi. I know. Your time has come. You were telling people to accumulate miners 6 months ago, 8 months ago when they were cheap, and they had a pretty good first wave run. A lot of 30% gainers. Some silver issues doubled
Mm.
during that. So it's great to have you here. And
Well, no.
go ahead.
No,
What
I was
was?
going to say thank you for the introduction. Thanks for having me. Looking forward to
Yeah.
this conversation.
Yeah. So why don't we start with what's on everyone's mind today? And BOJ meeting today. So I thought this would be timely. Uh, your comment on the yen is the BOJ is trapped. So if they're trapped, first of all, tell us how they're trapped and which way you think they're going to go. You think they're going to try intervention here?
Well, so I put out this chart that shows inflation expectation 10-year, the break evens, and this is calculated by the market today at, multi-year highs. Really interesting charts at currently at about 1.5%. And at the same time, we have, extremely low interest rates in Japan. They recently raised rates, but it's, nowhere close to the 1.5%. In fact, even the 10-year yield, which is more comparable given the duration of the measurement we're using on the break even, is also far from the levels that we're referring to. And if you look at the break even and you actually invert that chart and you look at the USD JPY
Right.
in normal terms, you're going to see that it's the same chart, it's the same
It
idea. So
is.
inflation expectation rises, you see a devaluation of the JPY, which is, it's the market basically telling you that, these guys can't do anything. And so they're not allowed because of the overwhelming levels of leverage we have in developed economies. It's going to be difficult to really protect the currency. I mean, yes, they could in theory, but
Yeah.
that would be a disastrous. And I think they know that that wouldn't be viable either. So it is interesting that we're seeing that dynamic playing out. I pay very close attention to Japan because I think it's sort of a leading indicator for other economies, especially China in this case. I think China is going to
Okay.
go through a kind of the 1990s environment of Japan, meaning, after the fact of all the collapse of real estate and all sorts of things and businesses going, bankrupt and so forth, you kind of have a moment of stagnation. I think China is going through that now, but this is Japan was a value trap for many decades, and now it's
Yeah.
starting to show some signs of life, not because of necessarily growth, but really because inflation is reviving and they can't do anything about it. So therefore, financial assets are also attracting that inflationary trade and
Okay.
moving higher. So
I,
uh,
you know, I have noticed a similarity in chart patterns
hmm,
between the yuan and the yen.
yeah.
Uh, you know, uh, and they've been spending a lot of reserves to try and cap it and manage it at these levels, but it looks like we're going to challenge those levels, maybe take them out in the yuan. So
Yeah.
there's the yuan and there's the yen. Excuse me, that's the Canadian. There's the yen. So the yen's even weaker than the yuan, but it looks like USD CNH is coattailing this move in
Yeah.
US dollar yen.
I think we had a discussion about this for the last time we talked, and it was basically an idea of, buying currencies that have, resource-rich economies
Yeah.
and shorting economies that don't. And I think I wish I had a bigger position on that myself because I think that has been a very good trade so far.
Yeah,
Not
you
really.
like the real, the Brazilian real,
I like the
since, for,
real.
yeah,
The real hasn't done very well actually recently.
peso has.
Peso has done very well.
Yeah.
I do think that that's an opportunity right now that we have is certainly the fact that we have the sell off in Brazilian equities. I like that. If you're looking for something timely, that's one part of the market I'm watching very closely because it's yeah, as a professional, we hate to chase a trend, as you know very well. And
Yeah.
so when there is a 15-20% sell off on something you like, that's when you come in. So,
Yeah.
I don't have a crystal ball, but I can see an opportunity, and so I'm definitely of that view right now.
Buying the break in Brazil. So did that come off with like the U.S. markets came off about 6%? Brazil was even weaker, down 20% on that. The
Yeah, I
whole,
mean,
go ahead.
the correlation between rates in the US and Brazilian real or
Yeah,
Brazilian equities is really high, meaning you have a rise of rates in the 10-year, usually that has a really big damage in the prices of those equities.
yeah,
So, it could sort of make sense. But ultimately, we all know the government in the US can't allow that happen for too long. So there's really, to me, there's like a cap downside on that for Brazilian equities. And at some point, we
good.
may see a run. So that's really the view.
Okay, you kind of come up with some nice charts that kind of put into question the whole thing of there being like a tidal wave of cash on the sidelines, waiting to buy everything on pullbacks. And you do it with a couple of charts. You do it with this money market funds to U.S. equities, and this is not when compared a lot of cash on the sidelines. It's all committed. Is that the point?
Well, it's just looking at on a relative basis rather than absolute terms. The same idea of looking at, you know, GDP in nominal terms doesn't tell you much. But if you look at that relative to many other metrics, it becomes more relevant. And I think the same is the case here, where what we're seeing in terms of data specifically is the fact that money market funds have been sort of a way where people tend to use as a bullish argument to say that there's a lot of cash on the sidelines. Now, there's no disagreements that that's cash on the sidelines. The difference is that the market has run up so much that on a relative basis, it's sort of not as meaningful as it was back in other market bottoms. I mean, if you look at the chart, I believe back in '08 or so, we were close to 60% money market funds relative to total equity markets. And that was driven by a big decline of equity markets, obviously,
Right.
and
Yeah.
also people flocking into cash. So it's kind of a combination of both. And back in the bottom of the tech bust, we were close to 30% of that measurement. And today we're, basically 1/3 of that. So, it's not to say this is overwhelmingly bearish either. I'm not
Yeah.
here to say that. But, this is not bullish. I mean, this is not something you should be pounding the table saying, there's a lot of cash on the sidelines. You should be buying the equity market. No, that's not really the case. So, no, that's really the idea. I mean, I think there's unperceived risks in markets right now and equity
Yeah.
markets. Kind of shocks me that we've had this environment of rates going up so much,
Yeah.
cost of debt increasing so much even on the equity cost of debt, but also obviously in the debt side too, because of interest rates. And either we go back to an environment where rates are low, either that's the right thing to be doing, or the default risk, the credit spreads risk, all those things are really mispriced because I
Okay.
just don't see a world where rates go from 1% to now almost 5% on the 10-year and drives the junk bond market to about 8% rates, as it used to be a lot lower, close to 4 to 5%. How do we refinance all that without
Yeah.
causing the default risk to increase and the actual risk to increase? And so that screams complacency to me. And I believe that the what is mispriced is really credit spreads.
Okay. There you go. Against Fed funds, it's a 3-decade low. That's 3 decades is a long time, even for me.
Yeah, and
So
the interesting part about the credit spreads is that they tend to reach a low as the Fed, starts to get into a hiking cycle. Literally every single time we've had a hiking cycle, if you look at the chart, at
yeah.
least that we measure credit spreads, which is all the way back to the mid '80s, um, we've had a suppression of volatility. And that usually is caused, if you ask the question, what causes that? Well, number 1, it's the lagging effect. It takes time for that to, kind of work through the economy. Number two is the fact that rates are rising. And so if there's a lagging effect and rates are rising, then the spreads get suppressed. And so, but ultimately, we tend to see some level of volatility come out of this. Default risk increases, credit spreads widen, the economy gets into some sort of issue, and that level of complacency ends up being a bad time to be very optimistic. And
It
so, yeah.
okay. Is this a year that a lot of these corporations, or there's a lot of debt rollover, or I've heard people say that in real estate, especially, that a lot of these CRE loans have to be refunded in 2025
Yeah.
and at twice the interest rate that they were.
Look, Coach, I've been unfortunately wrong in my calls in equity markets in the US overall, and probably not the right guy to ask, but my sense is that you're supposed to change your views when the fact changes. I don't think the fact has changed at all. I look at valuations, they're really frothy. I looked at that specifically you're referring to, especially the cost of debt alone should be a problem. And so again, either it's like we're living in is starting to live in an inflationary era. You're starting to see correlations change, like we
Yes.
tend to see in inflationary periods, like gold to interest rates, or interest rates are rising and gold is rising. Well, that wasn't the case before, even in real terms. I
Yeah.
mean, people
Yeah.
were kind of like, what's going on? And so you start to
eh,
see the yen, which used to be a
Yeah.
safe haven,
Right.
collapsing.
And a
um,
strong dollar did not impede the gold rally at all.
yeah, exactly. And
Yeah.
so
Yeah.
people are just, thinking about, and then you have emerging markets are performing. It's like, wait a second. I mean, this is not the market we've had in the last 2 to 3 decades, but it's not the entire market. There are pockets of the market that are still behaving like we were in a disinflationary era. Which pockets are those? You know,
The
I
mega
think
caps, are those the mega caps?
and even the mega caps, I am of that view, by the way, that mega caps are also mispriced.
Okay.
But there is a mispriced, meaning there's a lot of risk relative to how much premium it is, as far as the potential for return. Um, but at least there's a justification there. Maybe AI. I'm wrong about AI, and AI in the short term becomes this money making thing for most of those mega cap companies, and not a money pit kind of thing where people are overly spending on capex and so forth. And I believe AI is real. I just don't know the timing is a problem. It's the same
Yeah.
thing as the internet. And I think if you ask me, I think the timing will take, it
Longer.
will be longer than most expect. But regardless, there is a reason for people to expect, okay, well, maybe that's why mega caps should trade higher. Fine, we can disagree there. Now, credit spreads, if there's no reason, what's the reason behind credit spreads? A normal business that is, in the junk space, it's not a mega cap company today, I'll tell you that. And why is the default risk for a junk business at one of the lowest levels in history with rates where they are? With all of us know that
Yeah.
the
It has
leverage.
the strongest technical structure above corporates, grade A, and the worst structure is still treasuries. Are we in a sovereign debt crisis? And that's why people feel safer that they're going to get repaid with junk more than they want more premium from sovereign debt.
Yeah, and I think there's, maybe that's the case. Maybe that's the bullish case that people are making. I always try to get in their minds and try to understand what they're doing. But at the same time, if I really want to answer that question, I think fundamentally people have been conditioned to hedge their portfolios with fixed income. And, just risk has paid off. Taking risk has paid off in the last
Yeah.
2 to 3 decades. And so people are complacent in general. Investors are complacent. I mean, you talk to a young investor, you're not looking for a 30% return. A 30% return for a professional is great. A
Yes.
30% return for a
15 and over
15%
15,
is great.
you
Yes.
do cartwheels. You know,
Yes.
and you also comment about all the money still pouring into TLT being a bearish asset. Now I have this formation here that if I get a 90 close, I'm going to get long. But there is an
Mhm.
alternate view, and that's on the weekly of an incomplete pattern. My three drive to a bottom formation, Tavi, you've probably seen me talk about it before. But here's drive one, confirm low. Here's drive two, little divergence. And if we had one more washout,
Yeah.
if we close over 90, I believe the probabilities of this washout diminish greatly. But if we can't, we could do what we did here and have some type of capitulation at new highs in longer term yields out on the curve.
I
And is it,
yeah.
go ahead, isn't
No,
that
no,
what
no.
you're
Finish your
looking
point.
for? Isn't that what you're looking for? You do say we've had the longest and greatest inversion, which should be followed by very sharp uh, reversion to the mean with yields.
Steepening.
Yeah,
I Steepening is a big trade for Crescat right now. I mean, we've been today's working. I hate to jinx things that are working and talking about it, but it's working today, and I think there's more to go personally.
hold it.
Yeah.
Let me rub my rabbit's foot. Oh, okay. Now you're okay,
I
Tommy. It won't-
One thing I
Go
learned,
ahead.
coach, is the fact that it's that one of the hardest things to do as an investor is to not talk about your winners. And it's really difficult because
Yeah,
we're all want to talk about it, right? We're all
yeah.
happy about it. So it's hard. But going back to the fundamental reason why the two, we have a trade on the 2 versus 30. So we're short the 30-year yield and we're
Okay,
long the 2-year yield.
got it.
And I think if you put a gun to my head today and you ask me which one is going to work better of both sides, I
Yeah,
actually think is the 2-year, because the 2-year has moved drastically. We've seen an 80. I mean, we basically went from
here it
7
is.
cuts on the curve to less than 2 cuts on the curve. And so
Yeah,
I think people are just complacent, right? People are just saying, well, look, we're not going to have a recession. The Fed might actually have to hike rates. Inflation is coming back. I was in the camp that inflation would come back too, but I was not in the camp that we're not going to see a recession. I think we're going to see stagflation at some point. So I'm of the belief that the Fed might be forced actually to cut rates at some point here. And so if you ask me, I think with how much rates have risen recently and cost of debt and so forth, I think ultimately that drives risk higher. We're going to see a risk off environment. It's plausible that we may see. I don't have high conviction at 30-year after this such big move,
yeah.
but I don't have conviction until I'll tell you one thing, Coach, that I would be very careful on the long end, because and I think it adds to the steepening trade quite a
Okay,
lot. It's Trump reelection, and I if you look at when Trump
okay.
got elected,
That's interesting.
back in 2016, um, and look at the change on the 10-year, it was 180 basis points of a move
Yeah,
in the 10-year. But we're going back, we're like at 1-2% level, I think 1% level at that time. Today we're like 4.5%, almost 5. And you add it, even if it's 100 basis points, you're talking 5.5% or so. That is a huge move on the curve. And so why do I think that could happen? Well, first of all, forget about the COVID situation, because I
okay.
think that completely screwed up the data. But if you just look at prior to that and just look at what Trump does, he's a spender. We all know this. I mean, he likes
Yeah,
to spend money, and that an economy creates two things. It usually creates a positive thing and a negative thing. Positive thing is it creates growth. The negative
yes.
thing is it may create inflation and other issues. And I think we're getting close to a point that we saw during the BOE, Bank of England, when they cut taxes and all sorts of things, and you saw a major move on the 10-year gilt. And I think that that's a possibility here with the 10-year yield. I mean, I think we're going to hit the point of lack of discipline that is so high if he starts increasing the chance of getting elected, which my 2 cents, and some people went after me saying, "Oh, do you like Trump and all that?" I was like, "This is not a political view; it's just a
Yeah,
market view." I think
yeah,
Trump is going to win. I think Trump is highly likely to to win this elections. And if that's the case, we got to understand that I think he's inheriting an economy that is drastically different than what he inherited back in
yes.
2016.
And he won't recognize that.
And he's doing exactly the same remedy, right? Which
Yeah,
is, make America great again. All those increasing tariffs types of policies, which is is likely to create inflation as well. All these things are kind of the opposite direction that the 10-year yield is telling you right now. So I am of the view that we can see something really bad if that happens.
okay.
So I'm paying
Yeah,
close
I
attention.
I remember that the gilt crisis we had. That was actually the low in the British pound down to about 110.
Hmm.
But I wanted to let our viewers, instead of just hearing the words, here's the strongest chart pattern, much stronger than the bonds have, the treasuries have been. And then
Hmm.
second place is this, and then you compare it to, TLT as a proxy, and you tell me where the weakness is. It's uh,
Hmm.
it's treasuries
Yeah.
over. So our relative strength rankings would be right now, which you think is out of line. What's going to cause the steepening? Exactly what you just talked about, possible Trump victory and more spending, and people will lose. They're going to want to be paid more interest to hold our debt. Do you have a dollar view with that? Is the dollar, do you think the dollar is peaking out here, Tavi?
I don't have I never had I mean, I've had a strong view on the dollar in the past with the Chinese yuan and some
Yeah,
others,
you
but
have.
I don't have it's not a huge portion right now. I mean, I'm
Okay,
actually long Canadian dollar in a big way
okay.
because we're long Canadian securities and we're choosing not to hedge. So that means we want to be long. So
Yeah,
we're
so
deliberately long Canadian dollar
so
right now.
this could be a long-term double top here in paired USD CAD instead of CAD.
Oh, I like
So
that.
yeah,
That's a great chart.
okay. So that's
Yeah.
interesting because I'm looking for a top. I think there might be one more push, but I'm looking for a top. It's either top or there's one more hurrah. I'm just such a cynic, Tavi, that when I look at a chart like this, and I know there are probably a ton of stops over these highs. People are going to
Mhm.
be calling it a breakout. That sometimes the market has to clear out the last short
Mhm.
before it turns. You've seen that stuff before.
Mhm. Oh,
So
very
that,
interesting. Yeah.
yeah, so that would be about, I don't know, 38.80.
Mm.
So we almost got there. So that's what I'm waiting for, them to take out these highs. This high
Interesting.
was what, 39.77, and then get short. So I like it. And you know what? Talking to a guy like you, I had this thought prior. Now I have even more conviction. I'm going to stay laser focused on it. Um,
Mm.
I also want to talk about something interesting about the BOJ. You were talking about that the market size is historically low with the same money market accounts. When do you think that we're going to, and you talk about copper, okay, which plays into gold. And I want to get back to gold while we still have some time, because you know what? A lot of people think they're late, okay, because they didn't buy the bottom. And I feel that way at times. I didn't get a good entry. The market's gone without me. I'm late. But now we might be getting some type of pullback action. And you have a chart that, you know, speaks 1,000 words.
Yeah. Well,
Here it is. Here it is.
yeah.
Look at that. Where we are right now compared to other times in history where gold was a bigger percentage
Yeah.
of global assets. This looks embryonic to me. What do you think?
Yeah, and this chart basically was a chart that I found from Larry Leopard letter, and it had all these dates, and I basically just updated the recent data. And I look back and I was like, is this just arbitrary what they choose in terms of dates? And no, it's actually right at the peak of markets on gold when you had a big revaluation of the price in
Oh,
gold, which
okay.
is interesting. And so you can kind of see that on the macro level, gold, and it's mostly gold. Gold miners have not been like a huge amount of the market, maybe in the 1920s or so, but not a 1930s too. But you know, but recently it hasn't really been as big as prior times. And so, but really the gold asset as
Yeah.
an asset class is I would say it was equivalent to one of the largest parts of the market we've seen in history. And you can see that it kind of kind of stays around 30%, 20 to 30%. We're so far away from that. And yes, we know that the likelihood is that central banks are the ones driving gold prices much higher. And we can see that by looking at the GLD ETF fund
Yeah.
flows and other things that the Western societies tend to buy. And I'm the view that ultimately we're going to see some kind of stupid gold prices, really. I mean, meaning,
Okay.
likelihood of hitting. I don't even want to say because people end up quoting me on this stuff, but I think we can add a few zeros in gold prices
Wow.
at some point at the end of all this. And when I looked at this, I don't think the trade necessarily is gold. I think that I own zero physical gold. I own zero gold personally and in the funds. I own a
Interesting.
bunch of the miners. I think that the miners are where I didn't buy a bunch of illiquid assets in private companies that have major discoveries and great producing businesses because I think the market is going to move 20, 30%. I'm buying this because I think we're going to enter a secular movement for gold that is going to drive everything else. And if
Okay.
that happens, copper should be higher too.
Yeah, and that's what you were talking about. It drags all the metals. I have one exception, and it bothers me and tells me I'm going to have maybe a better opportunity to buy gold, is that I was taught that the white stuff leads. Okay, and silver has had a great run, but
Mm.
look at platinum, buddy.
Hmm.
That's still an ugly chart to me. It didn't
Yeah.
break out. I mean, platinum looks like we could have one more washout. I would love to see platinum make new lows and then buy the relative strength leader. And I think that's, silver. So, does that bother you at all? And can you explain why the platinum price is under pressure like
Look,
this?
I try to not get too cute about because there are issues in this cycle we're seeing that don't match with prior cycles.
Yeah,
And if you look back in the 70s, they don't match with the early 2000 cycles of who was leading those markets at those times and so forth.
yeah, yeah,
But ultimately, I think you really want to have the thesis of gold right, number one. Look, a year or two ago, silver actually retested below the $20 an ounce price, if you recall. And
COVID, it got to 12.
we were negotiating the seventh largest silver mine in the world. And I talk to people and people are like, well, wait for the breakout. It's like, no, you don't negotiate those things after a breakout. You negotiate those things when prices are, where they are. That's when you do those things. And
Right.
so that's sort of what we did at that time. And and not that I have a crystal ball or anything, but I just think it doesn't come to my mind how we can see gold prices at stupid levels without causing silver to either lead the market on the upside massively or offer much more asymmetry than gold itself. So, yeah, platinum. I'll give you another one. Back in the early 2000s, we had a tremendous market for the miners. But if you look at the miners relative to gold ratio, it was falling. Well, are miners supposed to lead? Well, they
Lead,
didn't
yeah,
lead.
yeah.
It was a great market for the miners, right? When a lot of people, I know some people became billionaires in that period. So my suggestion is, I think you have a different approach to markets than I do, and I respect that difference of approach, and I think
I
there's
do as
different
well.
ways to make money, and
I
that's
want to be like you now, Tavi.
no, I wouldn't do that.
I want. So I can just, and actually, my style has changed into more of a holder. I didn't capture the whole move in the miners, but I was there near the bottom, and next buy, I'm just going to sit on them and
Well,
not trade them anymore because I traded myself out of some profits, thinking the market would correct. And you're right. And I'm a pro. So, people that do other things for a living shouldn't try and trade. They should look for themes like that you have in gold. Just a quick update in silver. See where we stalled up here?
hmm,
Well, just, technical analysis doesn't always guide you the right way in trading, but it gives you potential counts. And you see the COVID low
yeah.
was about 12, and, we failed from 30, I don't know, three times, one, two, three. Over 30, you tack on this whole $18 move, it gives you 38.
You see that dip in July 2022 right there?
Yeah,
That's
right.
when we were negotiating,
All right.
and
Yeah.
it was scary. I'll tell you that. A lot of
Oh,
people are saying, "Oh,
it was here. On this pullback at 18.
I
All
remember
right.
people telling me we're going to go back to 12. We're going to retest the lows." And I was
Uh,
like, you don't know that. And first, if we go back through those levels, how much more downside we have versus upside.
yeah.
That was in my
What
mind.
a
I mean,
great entry.
I didn't
The
buy silver itself, but
I know, but a great time to squeeze people for a good price.
I'll
I'm
put
buying them.
I'll put a chart that it should be in your radar at least is zinc price. Um, if you looked at the zinc price, I don't know if you can get there, but that's
Okay.
one that if you looked at the price of zinc over, like, if you go back to hundreds of years in zinc prices, it has been in this upper channel, coach, like upper channel, and it hits the highs and then it crashes, it comes back low and goes high and goes low. If you go
Is
back
this
even
it?
now, yeah, but I'm talking about going back to the 1900s kind of price.
Oh, I
You will
can't.
be shocked. I mean, it's like, and right now we're right at the lower bound of this thing.
Yeah.
I That's another one that we also got large exposure to. We have
Zinc.
very large exposure to zinc, high quality zinc projects,
Yeah,
and
because it's going to double.
I'm of that view, and I also think it's a critical metal. It's gonna be part of this. The
And
reshoring. Yeah, go ahead.
it makes it more expensive to try and treat a cold in your prostate with more expensive zinc.
Yeah, absolutely.
Tavi, yeah, I could talk to you for another hour, and I'm a fan, and I think that everyone needs to follow you. You're very active. You do a lot of X spaces. I see a lot of people listening to you. So Tavi's X handle is his name, at Tavi Costa, and I bet Tavi would even take a DM from somebody that was interested in what he did. He's humble,
Oh,
and he wants to help people. And for what he sees coming, people are going to need help. So, Tavi, another great conversation with you, buddy.
I'm gonna speak like you. Thank you, my warrior.
All right, my trading warrior brother, Tavi Costa. Tavi, I look forward to the next time our minds meet, and I really appreciate your giving spirit because I know how hard you work to come up with these ideas. They're not coin tosses. So, thank you again, Tavi.
Thank you very much. Thanks for having me.
All right, Tavi Costa, everyone, check him out. Should be part of your intelligence gathering, especially if you're, interested in what the miners are going to do. And that's a wrap. Hope you enjoyed it. I know I did. So don't just count your coins and your bars and your shares. Count your blessings, and I'll see you tomorrow. Thanks, Tavi.
Thank you.